Thanks, Jamie. Morning, everybody. How you guys doing? Lights not too bright this morning? Room not too cacophonous? Anyway, well, thank you so much. This is day 2 of the conference, and Steve and I have another power-packed day of 6 exceptional panels, and it's my privilege this morning to introduce today's keynote. It was Eric Cioppa, who's current president of the National Association of Insurance Commissioners and superintendent of the Maine Bureau of Insurance, one of the 5 agencies within the state's Department of Professional and Financial Regulation. Eric joined the Bureau in 1988 as a statistician and then served as supervisor of the Workers' Compensation Section prior to becoming deputy superintendent in 1998. He was unanimously confirmed as superintendent in September 2011, and in January 2017, he was reconfirmed to serve another 5-year term. He is currently, again, as I mentioned, president of the NAIC, having previously served as president-elect last year, as vice president in 2017, and as secretary in 2016. In September last year, Eric was appointed by his peers at the NAIC to serve a 2-year term as a state insurance commissioner representative on the Financial Stability Oversight Council, also known as FSOC. He also chairs the NAIC's Executive Governmental Relations and State Government Liaison Committees and is a member of the Maine State Employee Health Commission. Without further ado, Eric, please join me in welcoming Eric.
Thank you, and good morning. And I apologize for being late. This is the first time ever I had to get hunted down by my secretary in Maine saying, "Where are you?" But I was with Jason. I'm blaming it on him. They asked me to join the next panel. First, let me say, I want to say at the outset, I'm not an annuity expert by any stretch of the imagination. It's not in my wheelhouse. But having said that, when we as all the insurance commissioners met at the beginning of my term as president, the annuity suitability model was one of the top priorities for 2019. There was not a question of, do we need to do something? It's we had to do something, and I think as I hope to demonstrate, we came up with, I think, a very good product, but it was not an option, so I'm very pleased with the progress of the working group. I just want to cover a little history of how we got to where we're at and a couple other issues, and I'm not going to take up the entire half hour, so I'm more than willing to take questions. So the Annuity Suitability Working Group was appointed in 2017 to review and revise the suitability and annuities transactions model reg to promote greater uniformity across NAIC member jurisdictions. And to be frank, the renewed interest was prompted in part by work being done by the Department of Labor. The DOL's fiduciary rule was published in 2016, but was then vacated by the U.S. Court of Appeals in the Fifth Circuit. When the DOL declined to challenge the court ruling, it is considering its regulatory options in light of the Fifth Circuit opinion and is expected to revisit the fiduciary rule sometime this fall. Separately, the SEC released a proposed rule package in April of last year, which included the regulation best interest, or Reg BI. The NAIC submitted comments to the SEC to coordinate our efforts so our respective regulatory developments could be as compatible, clear, and efficient as possible. The SEC finalized the rule in early June, and as directed, the Life Insurance Committee, the working group, soon met in mid-June to level set the goal of fleshing out the meeting of the best interest standard. This included discussing potential revisions to the model, considering the recently finalized SEC regulation best interest standard. So the working group met, and the working group agreed in concept on a framework for the model revisions incorporating a best interest standard such as a disclosure obligation, a care obligation, a conflict of interest obligation, a documentary obligation, a supervisory system to assist in compliance with the proposed new standard, and the working group agreed this would not be a fiduciary standard. So they met several times, and I can't say enough about Julian Fromont, the director from Ohio. She did an outstanding job leading this effort, and Beth Dwyer and Doug Ullman from Iowa and Rhode Island, respectively. I think did a tremendous job working and drafting, and I think they came up with a very, very good product. And I think it was earlier this week or last week, the working group voted unanimously to send the product up to the A committee. Just for those of you who aren't familiar with the A committee, how the NAIC process works, it's going to go up to the A committee. It's out for comment right now. The working group model is out for comment until I think it's November 26th. After November 26th, the comments will be evaluated and gone over. And in Austin, the NAIC's meeting in Austin, I think December 6th through 8th, the A committee will take up the working group draft in light of the comments and decide to make revisions or not. And hopefully they'll vote on it in Austin. And if they vote on Austin, it'll be then early 2020. It could be up for adoption by the NAIC plenary. So this model could be adopted early 2020. And once it's adopted, and just so you know, at the NAIC level, when you vote to adopt a model rule or a model law, you're committing you're committing yourself on behalf of your state to bring that model forward in your state. So it takes a 2/3 vote at the NAIC to promulgate the reg. But once promulgated, you're committed to going forward with it, and I'm very confident that we'll get there. Again, so that'll be 2020, hopefully early 2020. The full plenary will adopt the reg, and then states can begin moving forward. And since it is a regulation, it doesn't have to go through the legislative process. It's a rulemaking, and then the Administrative Procedures Act of each state will apply. So again, that's a process as I see unfolding. Again, I can't say enough. I just saw Beth come in. They did an outstanding job. So that's the next panel is going to be talking about the annuity suitability. I just want to mention a couple other issues that are happening at the NAIC that may be of interest to this group. The Retirement Security Working Group, since it was just formed, has not yet had its first open call. But I can tell you the working group will be examining the ways to promote retirement security consistent with the NAIC's Retirement Security Initiative. Steve Taylor is the chair of the working group, and one area we will be examining is the need for education from an early stage on to retirement. And retirement security is a huge issue. We recognize the NAIC. That's one of the reasons we're so concerned is when you look and see the portions, the people's retirement, their preparedness for retirement is really quite frightening when you look at the number of people, their savings they have for retirement going into the future. And the NAIC is trying to come up with a program where we can initiate education as early as high school, come up with some programs to start engaging people early on in the process. They need to save for retirement. So too many people are relying on Social Security, and they need to, the NAIC, we need to work together to promote retirement savings. Because we all know if people wait too long, and Social Security is going to be, the ability of Social Security to meet your needs in retirement is questionable at best. So I think this is an incredibly important initiative being led by DC, and we look for engagement with everyone. But having said that, one of the reasons, I'll go off on a little tangent, you're hearing a little bit about international capital standards that's sucking up a lot of oxygen at the NAIC. At the end of the day, why it's so important is the international capital standards, if adopted in the United States, would prohibit or very much inhibit insurance companies from offering long-term retirement products, longevity risk products. It's because it's incredibly important that insurers play in this space, can offer products, and we look forward to working with the consumers. But when you hear things like international capital standards, it should perk up your ears because, quite frankly, what's being proposed over in Europe would have a dramatic and draconian effect on the ability of insurance companies to offer a longevity risk product. I know that's not really my prepared remarks, but since I'm heading over to Abu Dhabi literally tonight to go talk international capital standards and it's coming for a vote, it's a very important issue that people need to be mindful of because if we went down that road, your companies and the ability to offer those products would be severely impacted. So the other thing I just want to mention is long-term care. I can't get up on stage without mentioning long-term care with a group of life insurers representatives. Long-term care is an example of a product gone bad, gone very, very poorly. It's a top priority of the NAIC to deal with this issue. I'm not going to spend a lot of time, but that is an issue that we need to resolve, and to any extent you have any involvement in long-term care issues, I encourage you to stay involved, but the closed block issue is really an issue we need to work together and resolve, because at the end of the day, we don't want many more Penn treaties out there, and it's an issue that I can't stress enough. We all own it. The regulators own it, the industry owns it, and we need to work together to resolve that issue because, quite frankly, the consumers who bought that product are relying on it, and it's under extreme stress. With the rate increases we're seeing, with the company financial issues we're seeing, the solution is not if we come up with a solution, we have to come up with a solution. And so those are retirement security, long-term care, and the annuity suitabilities are some of the top priorities of the NAIC during my year as presidency. And I know I've gone really fast, but I'd be more than happy to answer questions on any of those issues. Well, if not, I guess we'll go right into the panel then. Oh.
Tony.
You want to go to collaboration with the SEC and Suitability?
I'll try. It's probably better. That's probably better for the next panel. But again, we recognize we want to harmonize. I mean, life is complicated enough for the consumers and the agents. And when the SEC came up with a best interest standard, I think the leadership at the NAC felt pretty strongly we need to try and harmonize with the SEC and come up with a common standard. Now, unfortunately, the SEC didn't define best interest, so we tried to flesh it out, and I think we came up with a very good product. But again, it was trying to harmonize with the SEC. DOL, we're not sure what they're going to do. They had the fiduciary rule that got vacated, and it's our understanding they're still working on something, but we don't know. But again, one of our overarching goals is, can we harmonize to make life easier for the consumers and for agents and companies selling the product? Other questions? Again, I very much appreciate the invitation. The work you guys do is incredibly important. Retirement security is incredibly important to consumers in the United States. And to the extent you have questions or concerns about the BI reg, I encourage you to your companies to make comments. But again, I'm anxious to get the next panel up here with the real experts. So if you don't have any more questions, Beth?
That's great. Why don't we invite the next panel? Thank you so much.